Welcome to the Stock Market Daily News Podcast. It's Thursday, February 6th, 2026. Let's break down Wednesday's action. The S&P 500 slipped nearly 2%, the Dow Jones dropped 1.8%, and the Nasdaq tumbled a hefty 2.7% as a high-profile tech sell-off rippled through global markets. The spotlight story: software and AI stocks faced a major reckoning after new developments out of Anthropic and a wave of disappointing earnings jolted investor nerves. Today, we're unpacking the outsized losses in big tech, the software sector's AI shock, crypto's plunge and recovery, and fresh earnings from ePlus and Netgear. Let's get you up to speed on what's driving markets and your portfolio. First up, the day's most eye-popping mover. Oracle tumbled 5%, closing near $124 a share after investors hit the panic button on software stocks. Why? Fears that Anthropic's new AI-powered tools, especially its legal co-working plugin, could eat into demand for traditional enterprise software. That rout erased about $9 billion from Oracle co-founder Larry Ellison's net worth. In total, he's down a record $49 billion this year alone. Tech titans including Meta, Alphabet, Amazon, and Nvidia all saw their market caps trimmed by at least 2%, shaking confidence that software giants can defend their turf against nimble, AI-native rivals. Zooming out, the software sector as a whole faced its worst single-day drop in recent memory. A Goldman Sachs index tracking top software names nosedived 6% as investors recalibrated growth prospects. The culprit: growing consensus that AI tools like those from Anthropic, OpenAI, and even open-source projects could allow companies to vibe code their own solutions, trimming the need for conventional software subscriptions. This signals real risk for legacy vendors as businesses ask whether dedicated applications are worth the cost when smart, customizable AI agents can do more, and do it faster. Expect volatility as these competitive threats play out and valuations reset. Bitcoin didn't escape the fallout, plunging as much as 7% overnight to low $70,000 territory, mirroring the tech-led risk aversion. The sell-off was exacerbated by heavy liquidations in both crypto and metals, with silver down 17% and gold off 3% in a matter of hours. However, Bitcoin did manage to climb back above 71,000 as global markets steadied, though analysts warn this bounce looked more like short covering than fresh buying. Stablecoin inflows have also weakened, indicating many investors are waiting on the sidelines for a clearer macro catalyst. Turning to earnings, IT firm ePlus delivered a double-digit beat with fiscal third-quarter net sales up nearly 25% to over $615 million. Product revenue led the way, soaring 32%, powered by strong demand for AI infrastructure and security solutions. Notably, ePlus raised full-year guidance, but management flagged a looming risk: a potential industry-wide memory chip shortage that could disrupt deployment of new AI systems. Investors should keep an eye on supply chain developments in the coming months. And a quick highlight from Netgear. After years of revenue declines, the networking hardware maker reported its first year of top-line growth since 2020, up nearly 4% to just under $700 million in revenue for fiscal 2025. The shift toward higher-margin enterprise business and software-driven recurring revenue are helping margins, though management cautioned that rising memory costs due to surging AI demand may squeeze profits in the year ahead. To recap, major indexes logged their largest single-day losses in months. Big tech and software names are contending with disruptive AI competition, crypto remains highly volatile, and select IT infrastructure names are surprising to the upside but facing new supply risks. Looking ahead, keep your eyes on inflation data and jobless claims due Friday, along with the next slate of earnings reports. As always, stay tuned for the latest market moves. That's your Stock Market Daily News in under 2.5 minutes. Don't forget to subscribe and join us tomorrow for all the major market headlines you need to know.